So Reliance has declared their financial results for Q2 from July to September 2021, and the results have exactly been as per the dominance that Reliance commands in the Indian equity market. So in this video, we are going to take a detailed look at the results, understand what's working for them and what's not working for them, and then take a stock price recommendation for the Reliance stock. Alright, so if you take a look at this chart which shows the summary of the results, the revenue shot up by 50% on a year-on-year basis to 1,74,104 crores. The profit also showed a phenomenal growth by 46% to 15,479 crores. And if you talk about the earnings per share, that has also gone up by 6 rupees to 20.88 rupees per share. Now, Reliance is a huge conglomerate. If you look at only these results, it will not give you a complete picture of how the business is performing. So, if you take a look at this slide that shows the business segments where Reliance is currently active in, oil to chemical contributes to 57% of the entire revenue that Reliance Industries makes. So imagine the kind of dependence that the entire business has on oil to chemical. We might very well think about Reliance Retail or Reliance Jio, but still a whopping 57% of revenue comes from oil to chemical. 21% revenue comes from Reliance Retail, 11% from Reliance Jio and the other digital services, whereas the other businesses that Reliance has contributes to 10% of their revenue. But the fact that I'm trying to drive home here is that each of those business verticals has delivered a very strong growth with the exception of Reliance Digital. So if you talk about oil to chemical, that has grown by 58% on a year-on-year basis. Now try to understand it this way. Oil to chemical is the largest revenue contributing business unit for Reliance, and that unit is growing by 58%. So that augurs really well for a company like Reliance. If you talk about retail, that has grown by 11%. Reliance Digital has not shown a very good growth. It's only 7%, whereas Reliance Others have grown by 131%. But because the entire mix is only 10%, we are not going to talk in detail about this. So overall, I would say that the results have been fairly good for Reliance, again standing up to the expectations of its investors. Now let us talk about their share price recommendation. So when Reliance came up with their Q1 results, the current market price was 2105, and I made a video giving a buy price recommendation with a target of 2389 within this year. That target has already been achieved, and the link of that video is in the I button for you to look at. But given the kind of performance that the Indian equity market has delivered in the past months, I'm a little skeptical as of now, but Reliance is a very good stock if you want to hold it for a long term. And by long term, I mean at least 2 to 3 years. If you are invested in the stock and if you have a long term view, stay put in the stock and you are definitely going to make money out of it. Alright, that was my analysis for the Reliance Q2 results. I hope you liked the video. Please subscribe to Finance Lens for more of such content, and I'll see you the next time.